Egie, good afternoon. Let's begin by looking at the impact of those extended trading hours. Have we seen volumes improving with the larger number of hours available for traders to trade?
Well, with volume today about 2.4 billion naira, we can't really say there's been any significant change in volume.
So would you say that this has been positive from a market perspective? Are the regulators doing the right thing by increasing the amount of trading hours available?
Well, it's a step in the right direction. I mean, it'll take a while to know exactly what impact it'll have on traded volume and traded value. But the trend worldwide is for longer hours and 24 hours in a lot of markets. So it's a step in the right direction.
Yeah, but also I suppose the change coming as it does towards the end of the year, we've started seeing that across the globe, we are seeing volumes beginning to come down with investors closing shop for the holidays. Are we beginning to see that coming through in Nigeria as well?
Well, I mean, it's typical that activity slows down at year end, but again, we don't have enough data points to draw that conclusion yet. I mean, this is a bit of an unusual year, and a number of new things happening with AMCON and a couple of other key transactions going on. So it's possible that there'll be a slowdown, but it's too early to tell.
Yeah, but as you rightly say, it's been a bit of an unusual year. We also have an unusual event in Nigeria today. We've got the central bank governor before the Senate trying to explain his remark about 25% of overheads of the Nigerian budget being spent on Parliament, and that causing a ruckus with Parliament. Do we know if that's having an impact on the market?
We don't really know. I don't think it should have any significant impact. It's not really a policy issue in respect of the work the CBN is doing and the market reforms going on.
But I suppose if the governor is arraigned by the lawmakers and is unable to continue his work to bring some uncertainty, if you like, about the outlook for the market, given the positive reforms that he has implemented since coming into office.
Well, I mean, it's again, I think it's not really a policy issue, and until we get word otherwise that the policies he's pursuing are not being supported at the highest levels, I think it's safe to assume the reforms will continue.
Indeed, and we certainly hope that those reforms do continue. Let's talk about the overall market performance now. I mean, we're seeing the market closing flat today, and as we said, volumes are beginning to come down with the year coming down to an end. But going into next year, where would you be? Would you stay with the banks, or would you leave the banks and perhaps get into some of the more industrial-looking counters, particularly given the fact that the expectation is that we're likely to see the economy picking up speed?
Well, you want to be well diversified. I mean, this year has seen very good performance from a lot of the big consumer names. There's no reason to suggest that will not continue next year. Again, it's all about quality. The quality bank names generally should do well next year. And so really, it's about having a diversified portfolio and not be over-concentrated in any one sector. Yeah,
but would you say you've exhausted the value that that was seen in the banking sector, particularly given the fact that you've got AMCON on board now, and you also have a little bit of progress in terms of resolution of the issues that brought about AMCON?
Well, I wouldn't say that. There are many banking stocks that are trading even below book value. So in terms of a valuation basis, using price to book, which is typical for banks, yeah, there's still a lot of value in the banking sector, particularly with the non-distressed names.
Yeah. Would you pick up some of them for us?
Well, I think it's about adjusting your horizon and looking at which bank's management fits your investing style. But by and large, the non-distressed banks, the bigger ones, the tier 1 banks, are typically looking very attractive.
Yeah, but now people have been talking for a long time now about the potential that some of the distressed banks will be picked up by some of the stronger banks, and we're still waiting. Do you get any sense that that issue is going to be resolved anytime soon, or is it a case of perhaps the government having to come in again and put in strong policy support for these banks to become attractive, either for local banks or for foreign investors?
Well, I mean, there are many groups that are looking at different banks. And so this is a very large transaction. These are complicated transactions, and it's expected that it'll take a while to close. But again, we understand that there's a number of different groups looking at different banks. So we can't really draw a conclusion that that the government will have to put in any immediate new money for those deals to close.
But what's your sense? Does the government have to do anything to try and make sure that those deals are closed and closed pretty soon?
Well, I guess it's a function of the number of bidders that you have on the table. But at the end of the day, the government is committed to making sure that those banks can progress from where they are.
Egie, can I put you on the spot and ask for your forecast for the performance of the Nigerian market next year? Just the main index, perhaps.
Well, the main index typically in an election year doesn't perform superbly, but there's no reason to suggest that it will go down next year. But you're not going to get 50% gain. It's unlikely.
So if I get you right, we are likely to get somewhere between 0 and 50%.
No, I'm saying that you're not going to get the best year possible next year.
Right.
Due to the fact that it's an election year. There's really no reason to suggest that it will be negative.